Hello, Jim here. Today I want to talk about how the option wheel, especially in small accounts, can really be a great strategy during a market correction. Today is a really rough day in the market, so I'm also going to talk about, kind of how to handle this kind of a market correction. We have moved from kind of a mild market correction to a potentially deep market correction. Now we haven't hit crash level, but that may happen if we have another day or two like today. So stay tuned. I think you're going to really enjoy what I have for you today. Okay, now before I jump into the specifics for this video, I do want to give a quick market update. It's April 3rd. The market's in a pretty rough time. It's tanking quite a bit, mostly related to Trump's announcements about tariffs yesterday. Do I think this is going to continue? I have no idea. I do think it's an overreaction. I watched two different news programs, one CNBC, another one Fox News, and almost got completely opposite ideas of the what other countries are going to do related to the tariffs. So I believe it's overreaction. It's some panicking. So what's key is to not panic, to realize that at some point this, market downturn will be over, and then we'll probably rebound fairly quickly. The biggest mistake you can make is get out of the market and take big losses. What I plan to do is still make trades. I made a trade earlier today, a covered call on Coca-Cola. I'm looking at potentially making a few other trades, looking to see if I can roll anything out and down, hopefully. If not, I'm probably going to allow a few positions to get assigned and then manage them. I might keep the shares, I might sell the shares, I might put shares to someone else, but it's going to depend on each and every position. Almost all the positions that I do own, or do have, I do want to own those shares. So if I can keep them, I will. But if my cash position kind of dwindles away because of so many assignments, then I might look to sell some of them. In a lot of cases, I did 3 contracts. I might sell 100 shares, keep 200, or I may even do, sell 200 and keep 100. Especially if I can pick up some names dirt cheap. I noticed Apple's way down today. I think Shopify is down like 15%. So again, what's really important is don't panic, be patient, and try to kind of weather the storm, because at some point the market will move higher. And if you're out of the market, you'll miss it. Typically, in a recovery, if you're out of the market the top 10 days, you miss almost the entire recovery. So stay patient, try not to panic, and you'll weather the storm. So, with that being said, let's jump into the next part of the video. Now, one thing I wanted to talk about in today's video was that you can actually run the wheel, and especially if you pick the right companies during a correction. I'm running 3 different wheel strategies, and they seem to be holding up better than a lot of the other strategies that I typically run. So I'm going to talk about my middle level one. It's for accounts around 25 or 30,000, and how I'm doing with that. At the end of this video, I'll go into details and actually show you what those trades look like and how that particular strategy is holding up, as well as how the account is doing. Now, what's really important, or what's really key, is again sticking to fundamentals, and then also being sure your stocks are priced right. I like to look at return on equity. I like something typically to have, over a 10% return on equity. I also like return on assets if they're, you know, around the same level, if not higher. And then return on capital is something else to look at. I also look at debt to equity. I prefer debt to equity to be less than 50%, meaning for every $2 of equity, you have $1 of debt. I prefer no debt or very little debt. I also like to look at growth. Is the company growing? Are earnings growing? Are they paying dividends? Are they growing those dividends? Do they have a low payout ratio for those dividends? And then I like to see, are they overpriced? When I look at their PE and other evaluations or valuations, are they at a reasonable price? And if they are, then I'm much more willing to make a trade on them. Now, if they're way overpriced, then I might hold off. So that's kind of the beginning point. If you get that right, even during a market correction, long term, you know, the stock will drift back to where it should be priced. So if it's way overpriced, it's going to come down. If suddenly it gets oversold and becomes dirt cheap, it's going to rebound fairly quickly. So at least that's what I found. And I've been an investor going back to the 80s. I've only been trading puts the last 4 years. I've traded covered calls for many years. I've been very successful with covered calls. So that's my own experience, and it's worked out quite well. The other thing that I do like to look at now that I used to not worry as much about is option liquidity. You know, how liquid is this particular stock in the options market? Is there quite a bit of volume? Are there quite a bit of strikes that you can pick and choose from, as well as expirations? And mainly because almost in all my assets, anything that I've owned for many years, companies like Procter and Gamble, Southern Company, Con Edison, just to name a few, I like to sell options on them. So I want them to have good option liquidity so I can earn some pretty good premium. I typically try to double the dividend and then some. So if on average I'm earning 3.5% in dividends in most of my companies, then I try to double that. I try to get another 3.5 to 4%. And in some cases, I can even do better than that. You know, so if a stock is paying 3 to 4, I might be able to earn 5 to 6 in just really safe covered call options. And I did that for many years before I started selling puts in 2012. And then with what we're going through now, it's really important to be patient, and also be careful with recency bias. What I mean by that is we've been in a downtrending market for a long time. It just seems like that's the norm, and maybe you want to give up trading, but that's probably a big mistake. I like to keep enough cash so when you get into these opportunities or these situations, there's opportunities to pick up stocks dirt cheap. So just remember, we're not going to stay like this forever. A lot of what we're going through now is related to Trump. So if he kind of tones down the tariff rhetoric, then we might get a bounce upwards, maybe even later this week or next week. So just kind of keep that in mind. I think some people get so used to, a downward trending market or an upward trending market. You also can make a lot of mistakes if you pay way too much for a stock. So you might think, well, it can continue to go up and it's relatively safe to pay crazy prices for it. But when you get into a correction or, what we're going through now, suddenly those stocks will come down in a lot of cases a lot faster than the other stocks. So just kind of keep that in mind when you're kind of trading. Patience and then also recency bias can have a big impact. Also, it's important to use deltas to guide your entry points. I sometimes get away from this, especially when I'm rolling, but I pick a 15 delta typically for puts, especially on the new trade. And I like to do 20, 25 deltas for the calls. Sometimes I get a little bit too ambitious with the call side, and that's come back to kind of haunt me. And it may again this time you know, if you start selling calls too soon and you're under your cost basis and that stock shoots through the roof, then you can go from a deep in the money put to suddenly a deep in the money call. So be very careful. And I typically find a low 20 delta, especially if it's a momentum stock or a growth stock, pick a lower delta, maybe even go to a 10 delta. I've had a lot of traders who stick to a 10 delta and they do very well. Now, if you're not an investor and you don't care about owning the stocks, then you should be doing fairly well during this time period. My advice to you and what I've learned from other traders in my membership is get out of the trade at around a 50% profit. Don't let it go to expiration. Kind of manage those trades. The end result is you'll do more trades. But in a time period like this, you would have probably already gotten out of some of the trades. And the trades you're in now, maybe you just took a few losses and you still have that big bundle of cash. So just a few things to keep in mind. And then if you are just a trader and you don't care to own the stocks, then also be very careful with the deltas you pick for the setup. So you might even want to take less risk I would avoid potentially doing iron condors during this time period with the correction. When we do rebound, it's going to shoot up fairly quickly. And we don't know, we may go to lower lows depending on what other countries decide to do in relation to these tariffs. So, just a few pointers. And stick to your system, which is key. I continue to trade day in, day out. I might not make as many trades, but I typically will make one trade. I've made a trade every day this week, even though it's been a rough day or a rough week in the market. Today is a really rough day. And I again did another trade today. And that consistency, the bringing in cash day in, day out, has a major impact. So what I found is back in 22 when we had the market correction at that time, I ended up doing a lot better than the S&P 500 and definitely the Nasdaq. And that's because I was consistent. I was bringing in setting goals and bringing in that amount of money on a monthly basis. So even though we're going through a rough time in the market this week, I'm still setting my goals. I'm still trying to earn 8,000 in premium this month, and so far so good. I brought in a little bit less premium than the typical week, but I still have today and another day. So to me, it's people get into these situations, they've never been through it before. They panic and then they quit, and maybe they close for a big loss several positions, and suddenly they've had a bad experience and they stop trading options. This just comes with the territory. It doesn't happen very often. We have the correction now. I believe we had a not as deep a correction. I think we had 8 or 9% last summer. Then we had 22. We did have a downturn in 18 again with tariffs. This looks a lot like that 2018 downturn back, I think it was October to December. And again, it was related to Trump's tariffs. So, you're talking maybe once, twice a year at most. And then pretty much every other month, it's smooth sailing. So don't give up. Continue to work your system. Maybe make some modifications. If you have too many things getting assigned to you, pick lower deltas. Again, use a 10 delta versus a 15. Um, and if you're just panicked and you're just overwhelmed, then maybe take a break. Maybe don't trade for the next week, but get back in at some point and you know don't get out completely and not trade again. Also, a membership or being part of a membership can make a big difference. I added a channel within my Discord just for early assigned trades so that the members can ask questions related to early assignment or share their position that was early assigned. And then as a group, we can discuss, you know, how best to handle that, what they might want to do, what they might not want to do, or even opinion about that stock. Is it something, because it's such a bargain at this time, it would make sense to own it because it could double in the next couple of years. So something else to think about. And then finally, exit plans are really important. So like I was talking about with a trader versus an investor, um, when you get into a stock, if you want to own it, just remember you want to own it. If you don't want to own it and you're a pure trader, then identify what that profit you want to earn on that position or loss. What's the max loss you want to take or what's the max profit. But when you get into the trade, it's the most important for doing that. I also push the point of buying puts. So during this kind of a correction, if you had purchased puts, you're limiting your downside and you're potentially picking up stocks even cheaper. So, for instance, if you did a vertical put credit spread on a stock that was 100 and now it's dropped to 75, that, the put you purchased at 90 will become worth a lot more. And you could sell it and lower your cost basis, or you could put it to someone else and limit your loss at that time. I like to use it where I can lower my cost basis and pick up that position a lot cheaper. So that's how I like to do it. But there's a number of different ways. And that's also why I'm encouraging my members to share early assignments and how they, you know, if they need help with how to manage it. So next, I'm actually going to share with you what my wheel trades have looked like in this middle tier account, this $25,000, $30,000 account, which I call my balanced wheel trades. I'll go into a little bit of detail and show you what it looks like and how it kind of weathers the storm in this kind of a correction better than the typical account. So stay tuned. I think it's going to be worth your time. Okay, here's my balanced wheel trade strategy. This is my middle tier one. So if you have around a $25,000, $30,000 account, then these trades would have worked out really well, or could still work out really well. Or even if you had a smaller account or a larger account, but these were the trades that I did in this particular account. I've done it now for 6 months. I started with a $25,000 cash balance. And then what I've been able to do is I started with Chewy and Square and Twillo and Pins at first. Pins, they get assigned to me. Square and Twillo shot through the roof, so I stopped using them after the first month. Chewy expired. It also went up quite a bit, so I didn't use it, but they all had fairly good premiums. You could see Chewy had 108, 293 for Square. Twillo was 192. I actually did two of them. I rolled in the same month, so 158. And then the assignment um, was right around 3,095. So, and that includes the cost that was assigned. The shares were assigned to me, which lowered my cash basis. Then in November, I did Pins, Hims, Bluebird, FCX, and Fiverr. Again, all of them expired. I was able to roll and brought in some pretty good premium, 208, 368, 170, 105. And all of these had pretty good returns. Again, since these are cash secured puts, the lowest return was 28 and the highest was 62. So, and at that point, I had 23, 568 in the account. And that doesn't include the 3,000 or the 100 shares of Pinterest that I own. Then in December, I did some more rolling. I rolled Hims, I rolled FCX, Bluebird, and Occidental Petroleum. Um, so I did try something different. I did try Oxy, and again had some pretty good premium. The one that was blew me away was the premium for Bluebird, but all of these worked out pretty well. They for some reason I don't have the ROIs, but the ROIs were good, similar to what I've had before. The ending balance for the third month was 24,811. Then in January, again, I did Pens, Hims, Bluebird, and FCX. Um, did a pretty good covered call. That was 102. So one of my highest covered calls. Then I did and ended up doing Hims, rolling it, made some pretty good premium, 267, made really good premium again with Bluebird. And then FCX, pretty good premium, but not great. If you're not, Bluebird is the, yellow school bus company, and then FCX is a mineral company. They do, I believe they have a lot of mineral rights and they mine minerals, I think all over the world. So that worked out pretty well. And then I had Pens assigned away from me. At this time, I decided to do PayPal, so I opened a new position in PayPal, and I kept rolling Bluebird and FCX. And again, brought in some pretty good premium: 223 for PayPal, 217 for Bluebird, 121 for FCX, and here's the 3,400 coming back to me. I ended up making about $500 with Pens, which worked out pretty well. And at that point, the ending balance was 29,790. So I picked out 4,790 since I originally opened it just in 5 months. So back last month, and this was the last trade I did was literally last week, or actually this past Monday. Um, I did FCX. I rolled it again. I did have PayPal assigned. I'm getting ready, or I was hoping to do a covered call. Now with the market crash today, I might have to wait a little bit longer. You do have to be patient with a lot of these. I was, in some cases, wishing they'd be assigned earlier, and it's taking a lot longer for some of these to get assigned. So PayPal, I think it's going to recover nicely. I do like PayPal, and I had pretty good premiums. Yeah, 123, 192, and 173. Again, with PayPal being assigned, I haven't done a covered call trade on it, and I haven't started April. Um, but SoFi, I believe, has held up pretty well in this market. I think it might have dropped to $11. So I'm not in trouble with it. I believe Bluebird's only down a little bit today. It might be like 32, 33, which is pretty near my cost basis. So it's worked out pretty well with Bluebird. PayPal did get hammered today. I believe it shot down. It may be in the low 60s now with this correction, which I think is a steal for PayPal. They buy back so many shares that, I mean, I think over the coming years they potentially could buy back half their shares. So if you look at this, total premium 51.98, interest for 6 months it would be 652, and that's because of having a 25 to 30,000 balance. It right around 4% interest. Um, Total income 58, 51.35, which is like a 23% return. So just these trades, half the year, I'm already at a 23% return. And then monthly income, if I break it down by 6 months, and it's a little bit lower with this last month because of the assignment, and I haven't sold a covered call with PayPal. So, and then yearly income is 11,702. Total capital again ended with 29,443. So it's like a monthly return of 3.31% or a yearly at 46%. And then the rule of 72, which you just divide 72 by your return, you could double this this account in every 1.81 years, which is pretty substantial. And this is just showing what the cash balances currently look like. So I could do another trade, but I do have 1248 in available cash. And then stock value, it was at 69.95, but again, I believe it dropped pretty big today. It may be like 63, 64. And then the total value of the account, how I came up with it. So what have I learned? What are the notes? 4 or 5 monthly cash secured puts on good companies that are not overpriced. So in a small account, you can have really good returns because you don't need many trades. And so just showing some of these trades, how you can really do well. These are real numbers. I could do one more trade, but I've had a tough time finding good candidates. So I do share here a bunch of favorites, particular stocks that I think are really good for the wheel. Not all would be assigned, so it can be the 5 contracts, once assigned, run, call, and then repeat. So in a lot of cases, I wanted it to be assigned to me or away from me, and it just doesn't. Like Bluebird, for some reason, it just doesn't get assigned. Pick different companies due to some stocks becoming very pricey. So, and that was true of Twillo. It was also true of, what was it, Square. Now, both of those have been hammered recently. I think Square may be back below what it was when I traded it up here. It's right now, it was 65. Yeah, it's lower than 65, so I could trade Square again. This shows that things change and you cannot necessarily rinse and repeat. It's more complicated than that. So again, having to pick different stocks, it's, the one idea that I haven't had a chance yet to try it is maybe just do an ETF, like an IWM ETF, and just do one ETF. But when I played around with it, I couldn't make as much money with it. IWM has pretty good premium, but compared to some of these technology stocks, but it definitely would be a safer. Maybe you would get 18 to 20% on a yearly basis versus 40. But again, and I've told, I've mentioned in previous videos that rarely I've had the ETFs assigned to me or away from me. Now, the exception may be during this correction. I do have two that are fairly deep in the money that could get assigned to me. If you can get this kind of a return, you would double your account every 1.75 years. That's what it changed a little bit, so it's more like 1.81 years. And we'll do more trades this month, and Bluebird might get assigned, and I can run a call. And again, it right now it has dropped, so it might be a little bit hard to write a call, but my cost basis is pretty low. I think it's right around 34 or 35. And then both Bluebird and FCX are in the money, so that's what I was talking about. Now PayPal's also, I think I've only got these three positions. FCX is in the money. SoFi is also in the money. I believe it's like $11 now. So pretty much, and SoFi was a fairly new trade that I did on 327. This was more of a roll. So that's what I wanted to show you guys. You could potentially do a little bit better just sticking to these kind of trades. And since most of these companies are fairly inexpensive, I do think they are a little bit less risky compared to some of the other pricier names. When you look at Amazon, you look at Home Depot, and it's two, three, $400, or Microsoft. Going with some of these is a little bit safer. Now, if you're new to options and you're coming in right after this correction, you're sitting pretty because a lot of these stocks have been hammered and they're again at really good values. So that's what I wanted to share with you guys. Let me know what you think. Are you doing something like this wheel strategy? And if you are, share what stocks you're doing it with. And as always, thanks for taking the time to watch, and I look forward to seeing you next time.